Okay, folks, so very violent day. There's a lot of detonation all around. We've had growth stocks continue to take more ground as tech basically detonates and catches up with the rest of the bull market. Tech-heavy NASDAQ continues to outperform the other indices, and ARK continues to outperform the NASDAQ. It's almost like maybe the media was wrong when they told you to sell out of tech at lows last month and buy recovery plays in the Dow. Wouldn't have done terrible with the Dow recovery plays, but still, it's almost like buying things that are actually discounted make more sense than buying things at all-time highs, but what do I know? But anyways, today we're going to be doing something a little bit more violent than usual. Like we were talking about in Sunday's video, there are a lot of growth plays that are up 50% to 100% over the last month alone. And whether or not this rotation back into growth continues, I want to take some time to violently talk about some of the stocks that I see as worth snapping up and some others that I would let go of. We'll also, of course, be ending the video with the daily update on AMC as well. It's getting real tense and the momentum is growling. Roar. Are we sure this is an ape movement? Because it's starting to sound like a beautiful lioness about to eat a hedgehog. We all know that hedgehogs are some of the most shady and manipulative animals in nature. And before we get into this video, the only thing I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, let's go ahead and start with Crowdstrike. Crowdstrike is our cybersecurity play. They reported earlier this month a 70% increase in revenue year over year, of which subscription revenue was up 73%. And since their business model is built around reoccurring subscription revenue, the key focus should be on subscription numbers and their growth there. They've managed to grow to 11,420 subscription customers as of April 30th, 2021, representing 82% growth year over year. Crowdstrike was a cybersecurity play that we reiterated during the massive FUD market around tech plays, and our original price target in ZipTrader U was $240, and today it hit that. So congratulations to folks who believed in this play, did the due diligence themselves in this play as well, and today finally hit the price target. Now, of course, everybody's the captain of their own seas, and everybody has their own damn way of looking at stocks. But as for me, what I told ZipTrader U members today, and I want to share with you as well, is that now that we've hit our long-awaited price target at $240, my take is that you should consider locking in some profits or at least setting a trailing stop loss to protect the gains. We know that every single high conviction stock of ours is going to have periods of massive sell-offs and massive uptrends. And that means there's always going to be a new catalyst to push it back down, and there's always going to be a new catalyst to push it back up. Sometimes the main ingredient is just patience to get to both of those cycles and make the right decisions. And today, patience paid off for Crowdstrike holders. And as for the company itself, I love Crowdstrike. I think this is a great play. I've said in the past that I think this is probably a great long-term investment too if you're trying to make it not a swing trade or not a few month trade. But as for trading it, I'm going to wait till its next earnings before we designate it at a higher price target. But it may very well earn a higher price target down the road. But as for now, I'm happy with its performance. It did exactly what we needed it to do, and we're moving on. Okay, next, XPeng, or ticker symbol XPEV. So there are three homegrown luxury Chinese EVs: NIO, XPEV, and Li. Now, NIO is the big mama of the Chinese EV market. We love NIO. We covered it just on Sunday. We had a complete breakdown if you want to watch that video. And it's continued to do well this week as EVs got rewarded. But if NIO is the mama, XPeng is the side mistress. XPeng has been another one of our plays that has recovered very, very strongly chart-wise. And despite months and months of fuddy market and people trying to employ scare tactics to spread FUD about the EV sector, we've been completely unwavering in our A+ price target rating for this stock. A+ means the highest conviction for folks who aren't following our price targets. Why were we unwavering in our price target and in our conviction rating? Well, because they built a track record of delivering on their promises, and it just so happens that the market they're trying to grow in is the largest market, has the most potential of any other market, and they're also trying to expand into some other markets that have a lot of potential as well. Obviously, folks, we took a lot of heat for talking about a lot of these EV companies during the growth crash, because every single day I had to come on here and be like, okay, growth crashes, all of our high conviction growth stocks, EVs, they're getting punished, they're getting pummeled, stagnating, up, they're going down again, up, they're stagnating, up, they went up a little bit, and then up, they're stagnating again. So obviously it doesn't make us very popular when growth stocks are stagnating, but at the end of the day, that's what it takes. That's what it takes to actually find returns in a lot of these stocks. You have to be willing to get tested over and over again. And knowing that gives you a huge advantage, because just being patient allows it to turn around if you found a good company. Anyways, in terms of the company, XPeng has weathered the EV chip shortage storm better than average. They also have a massive sales and service network consisting of a total of 178 stores and 61 service centers, covering 70 cities in the biggest EV market in the world. And they reported impressive delivery numbers in the last report for May. They've also dramatically increased deliveries of vehicles in the first quarter overall of 2021, again, despite a lot of infrastructure shortages. And since XPeng is a little bit less mature faster than NEO in terms of its growth stage. That means it's set for a lot more exponential growth numbers moving into the upcoming quarters and especially in 2022. And with the most popular luxury EV company right now in China, Tesla, struggling with all of these PR issues, that's a win for XPeng, that's a win for NEO, and that's a win for Li as well. We're not going to talk about Li in this video, but that's another one we should talk about. And outside of China, NEO is also making headwinds in terms of expanding into Europe, starting with Norway, similar to NEO. XPeng actually did it first, though. In terms of the price now, it's up a lot already. People have doubled their money since just a month ago. But on the flip side, I personally believe that as we start seeing XPeng's delivery numbers and demand numbers in the late summer and early fall, it's going to be very, very clear that XPeng is dramatically undervalued. And while I'm reporting on some of the news in terms of XPeng, the truth is that my conviction hasn't changed at all with this. For the last 6 months, basically. Rain or shine, we've kept this at a price target of $70. Don't tell ZipTrader, you members, that I keep leaking my own intellectual property, but you get the point. But just to make a point that I think a lot of people need to hear, I have no way of reliably being able to predict macroeconomic events like a massive chip shortage or a global pandemic, or even some tariffs that screwed some of our plays a couple years back. And obviously, unless you're one of our fortune tellers, you probably don't know the future either. But what you can do is put the work in to actually understand the business model, the proof of concept, the track record, and the potential to expand within that industry that it's in. And with EVs, that's about as high conviction as it gets. EV is one of the hardest to ignore trends there are in the growth sector, and that's why you've continued to see these pick up first. By the way, this was my projection from the beginning. Our projection was when growth comes back, EVs are going to be the first to come back because they're the ones that have the strongest proof of concept right now. Okay, next, Chargepoint. So Chargepoint has been a high conviction play of ours forever. One of the leading, largest, and basically most experienced charging station provider in the United States. And in my opinion, this one ranks far above the rest, and my price target on this one is $40. And this is another one that we've held consistent because putting the work into actually value a company and then buying it when it's irrationally undervalued is the best way to trade a lot of these high conviction plays. This wasn't very popular when it was in the 20s, but all of a sudden, now everybody's starting to be excited about it again. Why is it that people have to see other people buying something in order to actually believe in something? Crowd psychology never ceases to amaze. But anyways, today it had some exciting news. A new partnership with Mercedes-Benz was announced, and the two parties will be working together to provide an integrated charging experience. One of the reasons that I've been such a proponent of Chargepoint is because it's just not practical for each EV company and each traditional car manufacturer that's going EV, like Ford, GM, and the likes, to have their own station. You're not going to wake up one day in 2030 or 2040 and see, okay, well, here's a Toyota charging station. Here is a Ford charging station. Here is a GM charging station. Here's Volkswagen. Here's Mercedes. Here's BMW. No, it doesn't make sense for each car company that's going electric to have their own charging station. That's just not practical. It's only been happening in recent times because nobody is building enough charging infrastructure. So Tesla had no choice. If they wanted to sell their cars, they had to build out charging infrastructure all around the US. Future car companies aren't going to have to do that. It's going to be similar to the gas station situation where you have some major players with their infrastructure built and all car companies go to those players. I'm sure some companies that built the infrastructure like Tesla beforehand may still continue to maintain their own infrastructure because they like to have their whole own ecosystem. But for the most part, you're going to see third-party station providers. And Chargepoint is the leader in that right now, and I believe is going to continue to be the leader in that in the upcoming decades. And we've seen a ton of companies team up with Chargepoint, but seeing Mercedes team up with them as well reaffirms that. Provides some more proof of concept that instead of companies going and having to build out their own infrastructure, they can just partner with some existing charging stations. Okay, now let's go ahead and switch topics. I want to talk about AMC. We've seen so many media outlets try to bash AMC over the last couple of days. Forget AMC stock. This growth stock can make you rich. Why a crash is more likely now. Sell AMC stock now before every other Wall Street bets speculator does. Which this title really goes to show how uninformed these authors are. Correct me if I'm wrong, I'm not a big Wall Street bets guy, but I do go on there sometimes to see what people are talking about and kind of gauging social sentiment. And it's my view that Wall Street bets is one of the least dedicated forms to AMC. In fact, every time I see an AMC post, somebody accuses the original poster of being a hedge fund shill trying to distract the crowd from GME, which is the real diamond, they say. And no shade to Wall Street bets or the GME folks. But it does seem that the AMC 8 movement is largely on other communities. But anyways, point is clearly biased and mostly uninformed news coverage, but what else is new? Now in terms of AMC's actual trading today, if you didn't believe my post $60 selling pressure theory that I've been talking about, this is actually another day where AMC has been met with intense selling pressure after making headwinds into the 60s. We've been talking a decent amount about how hedgehogs have every incentive in the book to make sure they stop this from going well above the 60s. And today's trading is yet another example of tons of magical selling pressure appearing out of thin air in the 60s. At the same time, where 80% of AMC's float is supposed to be owned by the retail trader. But somehow, every time this gets into the 60s, all of this magical selling pressure just starts dumping everywhere. You don't see that pressure at 55, you don't see it at 59. You see it right when it hits 60, and the higher it goes, the more selling pressure there is. But this time around, we've seen the best attempt in weeks to stay above the 60s. It didn't get as high as it did a couple days ago, but because it did it twice indicates that there's a lot of momentum building up here. And you've continued to see short interest rising as well, 4.25% today, according to Ortex. And Ortex also revealed some interesting data, indicating that the average age of short positions is 46 days, which means the average price is likely around $10. So you think about that and you start thinking, hey, wait a second. That's a ton of paper losses to be sitting on. That's a ton of borrows out for weeks and weeks and months accruing interest. And of course, the lower your average short price is, the more likely you are to get margin called if it goes up dramatically more. So if this is true, it really reveals the weak position that hedge funds are in right now. It seems like hedge funds are getting desperate and trying to bet the house. We'll see how it plays out. Maybe it'll play out like it did last time for them and the time before that. Some of these people really need to lose their damn jobs so they stop losing their clients' money. It's getting to the point where hedge funds seem to be compulsive gamblers. It's like they're going to Vegas and doubling down over and over again on a bad bet. But anyways, being a broken record, keep in mind that hedge funds do have to close these positions eventually, and every single day they don't, they're paying margin fees. The other liability of using tons of margin, because you're borrowing shares, right? To short sell something, you're borrowing shares. The other liability of that is a margin call. You can't just take unlimited losses. Hedge funds are open to being margin called. Sure, some of the wealthiest and most powerful hedge funds can take a lot of paper losses over the short term. But if AMC decides to just all of a sudden go parabolic again, how many hedge funds are going to get margin called and forced to close out? Let's be real at the same time. This wasn't supposed to happen. Obviously, none of this was supposed to happen, but it especially, after that cool-off we saw like a week ago, this wasn't supposed to bounce back. The media said to sell it and forget it because everybody's gonna sell out and you're gonna be left holding the bag. Obviously, I understand that a lot of people have different opinions on what AMC is. Some people think that it's a movement. Other people think it's just people throwing money in the wind and just kind of blindly buying. And regardless of what camp you sit in, the truth is that this is unveiled. No matter what happens, this has already unveiled all of the unfair BS practices of hedge funds. And people aren't going to forget this. And I'll continue to say what I've said before. Hey, we don't know where this is going to go. This is an unprecedented opportunity, but it's also an unprecedented risk. Just my daily reminder that you have to make sure that you're responsible for yourself with AMC. We don't know where this is going to go. I don't know how to project with all of these different variables. The only thing that is set in stone here is that hedge funds eventually have to cover. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. And of course, quick plug, if you'd like to learn how to trade, would like access to our private chat and daily morning briefings where we brief on all the biggest catalysts each and every morning, well, I'll go ahead and put a link to ZipTrader U below. But folks, please only join us if you're going to commit yourself to the process. Practicing paper trading with every single concept and then never giving up when times get tough. The program was thoughtfully created to give you a process to learn and grow, but if you don't complete the structure and dedicate yourself to doing every single lesson and doing it as and completing it as designed, then you're not going to get anywhere. When I buy something, I make sure that I'm going to get my money's worth out of it. So I expect you to do the same. And if you'd like to take the leap and join us, I'll go ahead and put a coupon code in the description below. Battlefield75 will get you $75 off before checkout. You just put it in the little add coupon code spot before checkout. And if you're wondering what broker to trade these stocks on, we always like to send new traders over to Webull. I'll put a link to them below as well. And signing up and depositing with the link below will also get you some free stocks. Anyways, have a great day and I'll see you in the next video.